Don Durrett is the founder of goldstockdata.com and a vocal analyst on the financial markets on Twitter. He's made some bold calls and a lot of them are coming to fruition. So really excited to welcome Don.
Hey, Elliot. Thanks for having me back.
Yeah, no problem. I just love getting an update from you because, gold had a bit of a rally a few months ago and you were not convinced that it was going to be a breakout. A lot of other people were, and you kind of debated them. And here we are. It didn't break out. So just want to get your thoughts on where we are and where we could possibly be headed.
Yeah, so gold's been trapped all the way back in the early first quarters when I think in January, I kind of gave up on gold as far as breaking out. January is usually a strong month for gold, and it did nothing. And so once we got, towards the end of January, I was like, we're in trouble here. And what I mean by in trouble as a gold investor is that you need some type of a trigger to break out. And so it became very obvious to me that the only trigger was going to be fear, because everybody since the election back in November, we had no sell-off after Biden won. And so that told me the markets were not afraid of Biden. So if they're not afraid of Biden, then they're basically very comfortable with what the Fed is doing. So if they're comfortable with the Fed is doing, then what do we have? What can make gold break out? And so the only thing that can make gold break out is fear. And so we're trapped until the fear breaks. And so what can break the fear? There's only one thing that can break the fear, and that is the market selling off. So you have to have some type of correction. So I've been saying since early first quarter that gold's trapped until the risk on trade flips. So the risk on trade is everybody basically buying stocks. Everybody's comfortable buying stocks. There's no fear. And right now it's unbelievable. We've literally seen zero fear this entire year, no corrections. Everybody's completely comfortable with the Fed. The irony is that the stock market will not go up unless the Fed supports it. So this is a Fed market. It's not an economic market. It's a false market. But at some point, the market will correct and the fear will come back. And so the key here is, do investors give up on the Fed and not buy the dip, or do they basically say, this is just a short-term little correction, the Fed's got our back, and they buy the dip? That's the unknown. And it's going to be really interesting. So I think we're going to get a correction here in Q3, Q4. Q3 is coming to an end here pretty soon, September. So September, October, I think that is when we're going to get this correction, and then we're going to find out how much people are going to go towards fear and buy gold, or they're not going to, and they're going to basically watch the Fed and basically buy the dip on the stock market. So interesting. Inflation is a real big key here. We can talk about that. I think inflation and the dollar, these are all really big things. This is huge stuff. This isn't minor detail stuff. This is huge.
Absolutely, it is. And that is really interesting what you're saying. And I agree that the stock market is completely overdue for just a pullback. And we have seen a bit of weakness and, just the last few days. And that's because I believe like the Fed's minutes showed something about taper talks. And obviously we know they're not going to taper seriously, but the market does seem to be a little worried about that at the moment, believe it or not. So what I'm seeing potentially, and just let me know what you think of this. So what if the Fed decides to think about tapering, there's a sell-off in the market, and then they come to the rescue and say, we're not going to taper. We're going to stimulate way more than we ever did. And that sets off just a cascade of, bullishness and lack of fear, which is bad for gold. That seems to be a scenario that you mentioned could happen.
Yeah, absolutely. I think it could happen, but I don't expect it. So let's talk a little bit about what gold's done the last 3 days. So I tweeted yesterday that they're having a taper tantrum. The market is against gold and against the markets itself. So the markets haven't really sold off that much, or they just haven't went up. And there's a lot of talk about the Fed tapering this year. And that's the reason why the dollar's up and gold is down. And so you have this combination that hurts gold. The combination is a higher dollar, which comes from tapering. And then you get a sell-off in the markets from the taper, which also hurts gold. It's just like, what's going to help? And so everybody's going, what's going to help the miners here?
Right.
So people are selling their miners because that's how it appears. But I could be wrong about this. I'm a gold bull, so I kind of look at it from that viewpoint. But my perspective is that the economy is a lot weaker than it lets on, if you will. Like I said earlier, that the only reason the markets are really this high is because the Fed is supporting it. It's not really the economy supporting the markets; it's more the Fed,
right,
and keeping the interest rates low. So my feeling is that if the economy doesn't come back to life here in Q4 and Q1 of next year, that the Fed has a problem, because I don't think inflation is going away. The big key tell here was that Biden is going to increase the EBT food subsidies up to 25% in October. Well, that's going to increase food inflation across the board. 25% is unusual, highly, highly unusual. I don't think we've ever seen anything over 10% before. So 25%, there's like 40 million people that get EBT cards. So there's no doubt in my mind that the grocery stores are going to raise their prices here to take advantage of those increased in EBT cards. And so that's going to go across the board. And so that's inflation. We're going to feel it. I don't think oil prices are going to crash here. So you got high gasoline are still in effect. I don't see anything that's really going to dampen this 4 and 5% inflation. They basically say that they're at 2% inflation, 2 to 3, but they say they're under 3. And I think we all know that that's bogus and that we're 4 and 5. So if you're at 4 and 5, and I think that's the reason why for the taper talk is because I think they realize that we are at 4 and 5. And so if inflation's not going away, that's really bad for the economy, because the consumer is going to have trouble, spending money. So we had this really weak retail sales in July. It was supposed to be positive and it was negative. I think that's going to be an ongoing thing. And so I see weakness coming into the economy. So I think that people selling miners here are really missing my way I look at it. The way I look at it is I think gold is looking better than worse. People are looking at it as gold looks worse instead of better. I'm the opposite. So I think that gold is going to make a really big move here in Q4 that's going to surprise people. And it's because of everything I just told you about the economy being weaker, which will bring in fear. And I really think that the stock market is going to basically hit a ceiling here and start muddling. I think we're turning Japanese, and it's just like what happened to Japan after they had their massive bubble. They basically hit a ceiling and they just couldn't grow anymore.
Yeah.
I think that's what's going to happen to our markets as well. And the Fed is finally going to just say, the Fed's going to recognize that they can't just keep pushing this market higher. They're going to have other problems than the stock market, I think. Inflation, liquidity, bonds. I just think we're going to hit a ceiling here with the markets soon. And we're going to start what I call muddling. We're just going to muddle where the markets, if you look at the market chart from let's say October to now, it's just went straight up. And it's actually increased. The trend is higher now than it was back in, November, December, January. It's higher. We're on a higher trajectory. It's like, whoa, we can't keep this up. It's impossible.
Right.
I mean, that to me is the real telltale sign, is the trajectory. It's like, no way, you cannot maintain this trajectory. So if you can't maintain it, what happens? You basically start flatlining. So, and that's what I'm expecting to happen, is we're just going to start flatlining, and people are going to start getting nervous, and they're going to basically start, selling their stocks and buying some gold. So that's my story. That's my analysis. And it's been the same analysis all year. I haven't changed, and nothing has indicated a change on my part. If anything, I'm more bullish now than I was going into early, Q1, Q2, because back then I didn't know if the economy was going to come back. But now it's kind of becoming obvious to me that it's not. And a big reason is because of Delta. Delta's kind of extended this weakness in the economy. There's been damage. Just one final point. There's been damage done to the economy that is not being acknowledged on Wall Street, not acknowledged at all. There's damage done. And it's not like this economy is just going to come roaring back to life like everybody assumes. Somehow that damage has to play out.
Yeah, the scenario I laid out was kind of business as usual, right? The stock market dips, the Fed comes in and saves it. You're saying that it's this time is absolutely different, and it's showing up in the scary inflation readings and just, even labor shortages, right? How many now hiring signs are you seeing everywhere? And that's just going to cause prices to go up as labor costs go up, and just and even supply disruptions. And the data you talked about, it's just all pointing to like sustained higher inflation, which we have not seen since the Fed started this massive money printing journey, like I guess in 2008. They even started in 2001, I believe, by keeping rates low. So yeah, so I think that's very, very exciting for gold, and that's why you're bullish now. And are you seeing this as an opportunity to accumulate shares in some of these like very oversold miners?
I think we're getting to the point where you could dip your toe in the water, but I've been very adamant since early Q1. I keep saying early Q1 because I don't remember the exact, which newsletter I started talking about the gold being trapped. I haven't really done, I should go back and research it and get the exact when I started doing it. My Friday week recap. So I do a Friday recap every week. So I could go back and check them. But since Q1, I basically said that I'm not buying stocks. I'm just going to start creating a list, a buy the dip list. So that's what I've been doing. And I actually tweeted it out yesterday, the day before. I tweeted out my current buy the dip list. So I have a buy the dip list that has 12 stocks on it, and I have a watch list that has about 10 stocks on it. So some of those watch list stocks could potentially make it to my buy the dip list. I have bought since January, I have bought about 4 stocks that I just thought were too cheap not to buy, or I didn't want to miss an opportunity. Like I bought like Emerita. I was like, I either buy it now or I'm never going to get an opportunity. So stuff like that. Yeah. I see a stock that's super cheap, but I'll buy it. But most stocks just went to my buy the dip list, and I'm waiting. And so I've been saying for quite a while now that I think that when the market's correct, that gold will go down between 1550 and 1650. I believe that gold will go down to $1,700 very quickly within a matter of days. So you're going to see once the market's correct, I expect gold to get hit. So it'll just boom, it'll go down to 1,700. Then from there, I think it'll show some additional weakness. So then you're going to start looking at between 1,650 and 1,700. So the first line of defense is like 1,680, 1,660. So do those hold. So maybe they will, but if they don't, then you're going under 1,650. So those are really the two kind of lines in the sand: 1,660, 1,680, and I don't think they're going to hold. That's why my range is 1,550 to 1,650. And it's possible we go all the way down to 1,500. That's a possibility, but I don't really expect it. I think it will. Gold will get a bid, somewhere between 1,650 and 1,550. So I think the HUI is going to go down, when it was at 320, I was saying that it's going to go all the way down to 230. And back then I said, you're nuts. And now we're at 240. So we went from 320 down to 240. This is this current downtrend. And yeah. I think we're going to bounce off the 240 a little bit, go back over 250, and who knows, we could go maybe a little bit higher than that. I think we're going to bounce here in the next 2 to 3 weeks before this correction happens. And it could be, 2 to 8 weeks before the correction happens. I don't know when the correction is going to hit. Might not even happen. But I don't think the correction is going to happen in the next 2 weeks. So in the next 2 weeks, I do expect gold, the miners, to get a little bit of a bounce here. Maybe we'll go back to 250. I don't think they're going to keep trending down. I could be wrong. But then once a correction happens, I expect it to go down below 230. So it was always my buy zone, 220 to 230, buy the dip zone. I don't think we'll go down to 200 on the HUI, but it wouldn't shock me. It all depends. If gold really gets battered, if gold gets battered down to 1550, then yes, the HUI could easily go down to 200, but I expect 200 to hold. So that's really, I'm not going to wait and buy at 200. I'll be, I think 220 is for me, that's a good entry point for me. Yeah, I might be catching a falling knife, but like they said, it's impossible to catch bottoms. So, right. 220, 225, 230, that's going to be kind of my area. Like I said, 240, there you can definitely dip in the water here and buy a few miners that are on sale. There are a lot of stocks right now that are at their 52-week lows. I mean, a lot. So there's a lot of stocks that are on sale. I'm just saying they'll go a little bit lower, but there's a lot that are super cheap right now, and they're not going to go that much lower. So it's not a terrible time to buy, but based on, again, with stocks, with gold and silver stocks, you have to be a believer and you have to basically be very bullish, because it's really easy to catch a falling knife. Gold and silver investing is not for somebody that has a low threshold for risk. You have to have a high threshold because it's very volatile. Look at the people that bought the HUI over 250. Over 300 this year. There's a lot of people that bought stocks over, when the HI was over 300, and they're completely battered right now. And they're going, what the heck just happened to me? So, and that's the volatility. You can get hit, crunched very, very rapidly, very, very quickly. So when I say dip your toe in the water, I'm talking about people that are, that have done this before and understand the risk and understand, you never know with miners how far underwater you can get. I don't care what miner you buy, you can be down 50% in 30 days. You can be down 50% in one day if in some situations, depending on the micro cap versus a large cap. But the volatility in the entire sector is high. And, I'm looking for 300, 400, 500% returns. If I'm going after alpha that high, I have to acknowledge the risk, the volatility. It's there. It exists. You can't deny it. So I just want to clarify that.
No, that's great. And obviously listening to you earlier on in the year would have been wise, because you would have, people wouldn't have been chasing the gold and stuff, at these all-time highs. They would have been more disciplined like you were, and like had a buy on the dips list. And, this would have been the most incredible buying opportunity, or potentially, right, starting to get there. Because you're right, a lot of this stuff is very low, 52-week lows for some great gold miners. So I will definitely check out that list on Twitter that you put out there. And it's just really interesting. The HUI is the same price as it was in 2003.
Yeah.
but that's the more depressed the investors are in the space, the more likely, in my opinion, it is for there to be the reversal of their expectations, right?
Yeah, since I basically, in my last answer, I kind of ended it, with kind of a risk assessment to let everybody know about this sector. So now I'm going to kind of open up the nozzle a little bit. So I think that we're looking at, now I could be wrong, I think we're looking at kind of a buy of the century situation here. For instance, if silver goes down below $20, you could just load up on silver producers and silver development drill stores. I mean, you just load up. I have about 65 silver stocks that I think are kind of legit, and you could buy half of them. Pick your favorite 30, if you will. If silver went to 30, goes down under $20, that could literally be the buy of the century, because if you look at the silver chart, let's talk a little bit about silver. So silver has only had two significant runs since let's go say 1970, even 1960. We can go all the way back to 1960. So it had one run in 1980, and it went to $49, but it only stayed at $49, and it was a fast run. It went from 30 to 50 very, very quickly, and then crashed. It did not stay there. So the amount of time that it was over $35 was a very short window. And then it crashed. By the end of 1981, it was back under $10, I think, maybe under 15, something like that. It crashed hard from $50. Then we had to wait all the way until 2011, and nearly the same thing happened. Silver went from 30 to 50, and it was the key number here, 30 to 50 on both of these and 35 to 50 on both of these. Very, very short period of time. And so there's basically, my point is that silver has really never made a run ever. If you look at historical, if you look at the historical value of silver, it's really never been over $30 ever. I mean, and if you do it for CPI, if you do it for inflation, silver's basically been a very, very inexpensive, cheap metal for its history. And the irony is that, and because of those two reasons, the chart is unbelievable, because you had this $50, $49 breakout in 1980, and then you had this big, there's a big bull, this big crash, and then it took a long time, and it went all the way back up to 49. So you have this big bull over 40 years. And that bull is created this massive cup and handle, and the handle's been getting created, since we went up to 49 last time. So 1 year. So this 1 year correction has created a handle on this bull, and that type of a cup and handle is just so ideal for silver finally making a bull run. In my opinion, silver's never, ever made a bull run. So this is the chance, the one opportunity right now with this huge cup and handle for silver to make a bull run. So if you buy, physical silver, if it goes under 20, you might be able to get it at 25, maybe somewhere right in there, 25, 26, some 10-ounce bars, which wouldn't be bad. But the miners, if you're going to be able to buy these miners under $20 silver, and silver does have this bull market that I'm thinking it could have. If silver runs from 30 to 50 and it doesn't stop, so the run from 30 to 50 is going to make the entire silver sector more than double. It'll triple in value, like a two-bagger for the entire sector. And many of the stocks will be up more than that. So the whole sector will go up 3x, and many of the stocks will be up 5x. And that's just the initial run to basically put silver into its first ever bull market.
Wow.
Right. So once you get to $50, that is when the bull market really starts, in my opinion. Because that's the first time that silver's ever been at $50. So how long does it stay there? And how much higher does it go? If it gets to 50, if it just gets there, you have to think in terms of being logical. You have to think, if it gets to 50, there's going to be a mania that follows. The mania is everybody that wants to get in, right? So everybody's going to be wanting to get in around $40. So in my opinion, 50 is the starting point. So again, you're buying miners under 20 and the bull market starts at 50. That's why I'm calling this the buy of the century. Now, again, I said I'm going to open up the nozzle a little bit here. This is the potential, but I'm also telling you that this is also, there's that kind of alpha that's there to be made. You might be exposing yourself to losing 50% of your investment. You can't, none of this stuff's guaranteed, but the alpha is definitely out there to be had. I think that $100 and $100 silver is a very conservative number because of this mania phase that I think is going to kick in at $50. So basically my thinking is that once you get to 50, it'll run to 75 fairly quickly. And once you get to 75, it's only a hop, skip, and a jump to the 100. So that's why I've always said 100 is basically not that, that difficult to reach. And my target has always been 150. A lot of people's targets, 300, 500. My target is 150. And so I expect to get there in the next 2, 3, 4, 5 years. And so if we do, this very well could be the buy of the century. It's set up for that.
Yeah, absolutely. And I just love how the technical analysis you gave just over the last 100 years aligns well with America and its position and its inflation and the money printing and the declining dollar, right? It seems like the fundamentals are backing up your technical analysis, right?
Yeah. So the one thing that I have done from day one is I have focused on the fundamentals of why you invest in gold and silver. So the fundamentals are the macro environment, the global macro environment for economics. That's the background. That's what drives gold and silver. I always say that nobody should be buying silver that doesn't believe that silver is going to 100 because it's just too high risk of an investment. You have to be a believer, diehard. But your belief has to be predicated on something. Where does the belief come from? So some people just look at the debt of the federal government, and that's enough for them, right? The debt bubble is enough for them.
Yeah.
But I don't stop there. I keep going. I look at everything. I look at, for instance, all the little macro factors. I look at, for instance, the middle class. The middle class has slowly denigrated since 1970. It's been shrinking. I was reading yesterday that over 60% of the workforce in the United States now is basically low-income workers. 60%.
Jeez.
And the reason why it's 60% is because the middle class got hollowed out. It didn't used to be that bad.
Yeah.
So it's gotten to the point where the U.S. is becoming a bit of a third world country. It doesn't deserve its financial status in the world, where New York City is basically the financial capital of the world. It doesn't deserve that status anymore. And I believe that the dollar is kind of headed for the junkyard. And the reason why is because I think that we are basically printing inflation. We're exporting inflation to other countries by basically printing the dollar up and making the dollar worth less. So when other countries get our dollar, and in fact, point of fact, they're getting something that's deflating. And so it's becoming worth less and less money. And so countries are steadily starting to realize this, and they want out. They're basically saying, I don't want to hold dollars anymore. And so you're going to slowly start to see this where countries move away from the dollar, in my opinion. And I think that the U.S. economy, yes, we innovate like crazy. Yes, we have the strongest technology sector in the world. We're second to none in the technology areas. Absolutely. But where we're faltering and faltering badly is in the manufacturing sector. We basically don't make anything anymore.
Yep.
We do make cars, we do make stuff, but we don't make electronics. We don't make appliances. So, those are the big dollar things. We don't make clothes. We basically become kind of a service sector economy, and 60% plus are low wage workers. That's not a good thing. So our economy is weakening. It's being hollowed out from within. And this all started in the 1980s with Reagan. So what happened is all the way up through 1970, the United States was a mercantilistic economy. We were very, very strong. So coming out of World War II, we were really the only manufacturing force going because all the other countries were decimated. I mean, you think about Europe, Europe was totally decimated. Asia, they were decimated. They weren't ready yet to make anything. So the United States, South America wasn't making anything. So the US had it all to themselves in the 40s and 50s. So we were this juggernaut of a mercantilistic economy. And that's why our standard of living was so high in the 50s and 60s. And then you hit 1970 and Europe and Asia started catching up. And so what did we do? We're like, okay, we can no longer, our corporations say we can no longer just make stuff here. So they started making stuff in Europe and Asia. And that started the globalism. And Reagan was behind that 100%. And that was when the hollowing out began. And so you had the Rust Belt. The Rust Belt, that's when we started in the 40s and 50s. The Rust Belt was just going gangbusters, right? Now the Rust Belt is a bunch of empty buildings. Yeah. We closed all those buildings in the late 60s and the 70s, closed them all down. And that's where the middle class got, basically imploded. But yet Wall Street, through expanding debt. So if you go to Reagan before in 1980, we had less than $1 trillion in debt when Reagan got into office, less than 1 trillion. When he left, the debt was almost 2.5 trillion. And he just started the wave, right? And then it just kept going. Every president after that, the debt just kept going. And basically what Reagan proved was that if you stimulate the economy through deficit spending, it's basically a good thing for GDP. And they didn't really, and inflation never really took off. The last time we had high inflation was the early 80s. And so, they just kept doing it. They just basically kept deficit spending, stimulating the economy, and using that to maintain our standard of living. And now we've gotten to the point where we're using MMT, which is a whole different story. I don't want to go in that. That'll take another 10 minutes to explain. But basically, the U.S. economy is living on borrowed time. And so from that standpoint, the dollar is living on borrowed time. And so that makes gold and silver very beneficial to that outcome. And that's the reason I'm in gold and silver. Yeah. It's basically kind of the demise of America type of a theory analysis. So you got to have this type of analysis, or you shouldn't even be involved in gold and silver. You have to be very negative the dollar. You shouldn't even be doing it. Well, you can do gold, but not silver. And gold, gold's an asset you can do because it holds its value. But you shouldn't be messing around with silver if you're basically bullish the U.S. economy.
Yeah, 100%. So yeah, absolutely. So the fundamental analysis that you just presented aligned with the technicals, like I had said. But one thing you brought up, and this is something I definitely wanted to ask you about. So, because you've been right on Bitcoin, right? You've pretty much bought it low, and here we are. It's back up again. And anyone who's listened to you on that has done really well. You're also into blockchain and the adoption of, I think Bitcoin is like right where the internet was in 1997. And it's just really interesting in my mind how technology and America's superior position in that align with this, because I'm thinking, could there be one last leg built on the blockchain innovation bubble or something of that sort that kind of delays the ultimate end? I mean, it's just an interesting question, because how does blockchain and your bullish case for blockchain play into this whole scenario?
Yeah, it's a really interesting question, especially the ending there. So, first of all, I think that the blockchain is, like you said, early, very early on, and it's not going anywhere, and it's going to impact humanity in a big way. The one area where I'm ambivalent to answer is how it's going to impact society. I don't know how much society is going to implode here over the next 2, 3, 4, 5 years. I'm not sure the level of the implosion and how society transforms, because I believe we're in a transformational point right now. And I don't know how far we're going to fall. If we don't fall precipitously, when I say how far, so does America remain intact in its current situation, its current economic system, its current social structure? Does it survive to that extent? If it does, then I think blockchain is just going to be, amazingly impactful for society. I think it's going to be impactful, but I think it'll be even more impactful if we don't basically implode. Because if we implode, then that's going to suck a lot of money out of the R&D area. Right now, it's going nuts. Blockchain is going nuts as far as R&D goes, development goes. So if we don't, implode to a large extent, I think that's just going to continue onward. And if we do implode to a large extent, I still see blockchain surviving and having an impact. Big example is like people keep starting to use the term metaverse. And, I just saw where Facebook is starting to today, for the first time ever, I heard it today that they're going to try to create a virtual office. So we're going to start to see, Ready Player One is going to happen on the blockchain, in my opinion. I think that's really the place it's going to happen, because the blockchain it's kind of built for things like that. I think it'd be the reason why is because from a security standpoint, and this is where people don't really get Bitcoin and they don't get blockchain. So let's talk about it a little bit. First of all, when I saw Bitcoin, I always thought of Bitcoin as a collectible, not as a currency, because it's too valuable to spend. It's silly to spend Bitcoin. Bitcoin's at $50,000 right now, but it's going to probably be $100,000 in 12 months. So why would you spend something that's going to double in value? It's not made to spend. So Satoshi made a mistake. He wanted it to survive, but what he ended up doing is he created something that was so valuable. I think is the most valuable asset on the planet. So everybody thinks in terms of Bitcoin as being, this currency that's going to compete against the dollar, and rightfully so. I mean, El Salvador is going to try to use it, but I think that it's really going to be an asset that people just hold. You put it on your balance sheet and you don't touch it. You just let it appreciate every year. It's like a painting. It's like a Picasso. You buy the Picasso, you put it on your wall, and it just sits there. That's really what Bitcoin is. It's basically an asset. And what people don't get is that Bitcoin has a governance model that nobody else can copy. And the governance model is what makes it valuable. And, one of these days, somebody's going to write a Nobel economics, article on the reason why Bitcoin's valuable. And they'll basically show that it's all about their governance model. Their governance model is unique. Nobody else has anything like it. And you can't duplicate the model. Yeah, you can duplicate the software, but you can't duplicate the model because of the way it was created. Nobody's even tried to duplicate the model, and I don't think you can. So those 21 million, that's why Bitcoin is a collectible and no other crypto is. So that Bitcoin is unique. It needs to stay over in a corner all by itself. It's not really a cryptocurrency. So now we bring in second generation, which is Ethereum. And here's the thing that really amazes me is smart people try to put Bitcoin and Ethereum in the same box. And they say, well, Bitcoin, Bitcoin logically and even through math and through economics, you can't value Bitcoin because it's a new asset. We don't understand it. So what they do is, since they can't understand Bitcoin, because how do you value a liquid asset that's secure? You can't. We have no idea. We don't know how to value that. That's why we just know it's going to go higher. So, yeah. But Ethereum is a whole different animal. So it's second generation, and it doesn't have anything to do with money. It can be used as not so much a transactional currency per se, but it can be used as a store of value that gets transferred around. It's not really money per se. It can be used it's basically used in a contract. So it's more of a software application than it is a currency. But a software application can hold value, if you will. And a promise can hold value. And so that's kind of what, what Ethereum has. It's basically a smart contract. It's not a collectible, it's a software application. So that's second generation, and people really haven't really been able to separate out that Bitcoin and Ethereum really have nothing in common. And so they basically package them together, think that they do. They don't like Bitcoin, so they don't like Ethereum. And now we're starting to see new third generation, blockchains that are basically business applications. And so the business applications, people are they're still ignoring the crypto because of their initial ideas around Bitcoin, when in fact this has nothing to do with Bitcoin. This is a business application. Good example is HBAR. So all HBAR is a really fast decentralized database. So what decentralized databases? I'm getting to the metaverse part of this thing. Until blockchain came around, we used point of failure databases. Yeah, we had backups, but they still were single point of failure. Then you could roll over into this backup system. But the problem with these backup systems is they're not really real time. It costs too much money really to have a real time backup system. That's why you had all these pipeline, the pipeline where we've had all these people, all these hackers basically, shutting these companies down because it's a single point of failure. Well, where these third generation databases come into play is that they're not single point of failure, so they add more security. So if you want to create a virtual reality like Ready Player One, you do not want to do it on a single point of failure. You want that system to be up 24/7 because people are going to be living in that virtual world real time 24/7 all over the planet. So the ideal software to do that is basically some type, not necessarily a blockchain, but a decentralized database is very similar to a blockchain. A blockchain basically gave us ideas on how to create these things, like a ledger, like what HBAR's done. So you're going to see, I think when Ready Player One gets created, I don't know what they'll call it. It'll be on a decentralized database with servers all over the world. That's what's coming. This is the future. And nobody can really see it. It kind of blows my mind because I get people on Twitter all the time telling me that crypto is, going to zero. Right. And they don't realize that all they're thinking about is, Bitcoin, and they're not thinking about the second and third generation models, what they're actually having the capability to do, which is to create a more secure database. And it's kind of mind blowing.
No, that is it's absolutely mind blowing, and the technology is revolutionary, and there are thousands and thousands of companies being built around it. And to me, it feels like, the internet, when the internet came around, all these random companies sprouted up. Some were good, some were bad. So my question is, because it is a revolutionary technology, because markets always overreact to revolutionary technology, because it's exciting, could there be kind of the last gasp of this Japanese-like bubble in America built around this potentially, right? This innovation before we see that, loss of control due to impossible to control inflation? Is it possible that blockchain just kind of like throws a wrench into everything in a way?
Yeah. So this is a great question. So I've been a bit of a futurist since 1989. I started writing books in 1990, and my books were generally based in the future. And so I've always had, a real fascination with the direction of the world, where we're heading. And so I've written, a lot of these books that are, based in the future, my expectation of what's going to happen. So this is where my head is. I think that's one of the reasons why I liked crypto and I liked Bitcoin, because I saw that when I looked at Bitcoin, I saw two things. Number one, you can't turn it off. And people are starting to realize that now. So number one, and that's the governance model I was talking about. You can't turn it off. Any other crypto out there, you can turn off. Any of them. You can turn them all off. You cannot turn off Bitcoin. That's what makes it unique. That's why it's over in a corner by itself. So number one, you can't turn it off. Number two, it was designed to increase in value over time. through the halving. You put those two things together, plus the governance model, and you have something that is very disruptive. And that is the beginning of the disruption. And so that's what you just talked about. You talked about, this disruption. I forget, you said something, what was the terminology you used? Something in the rock and the...
Yeah. Oh, just revolutionary technology, just changing so many things. And
no, you used actually a term, something that could disrupt, the cog in the wheel. Somebody threw a cog in the wheel.
Oh yeah, it could just be a wrench. This innovation could just be a wrench.
Yeah. That's what I was getting at. Yeah. So that is what the blockchain is doing. It's just very disrupting. And so the U.S. economic model is closely tied to the global economic model. We have New York City is currently the financial capital of the world. Well, crypto is speeding up the change. You're spot on. That's the wrench that blockchain is doing. It's basically disrupting the dollar, it's disrupting trade policies, and these things are just going to increase in speed. And the reason why the U.S. hasn't outlawed Bitcoin or outlawed DeFi is because they know that the rest of the world is going to keep using it, and they don't want to be on the outside looking in. And I've always said that the key player in all of this is Japan. They're the key player because Japan has adopted, they were the earliest country to adopt Bitcoin. If you go to Tokyo, you see Bitcoin signs everywhere. They're the first country, and their government has basically been pro-Bitcoin from day one. And so if Japan basically says we're going to allow Bitcoin, then the rest of the world can't just give Bitcoin to Japan because it's worth too much money.
Right. Yeah,
that's the one thing about economics and global, global foreign policy and all this stuff is that we're competing against each other. This is not a friendly neighborhood. You always talked about Japan, and you go back to the 1980s. They talked about how Japan was literally strategically at economic war with the United States. We stopped talking about that because Japan started having trouble in 1989, 1990. So we stopped talking about that. But that type of, that's still real. That didn't go away. That economic warfare still exists. So blockchain and crypto, they basically play a role in that. So very disrupting. I think it's going to speed up basically the demise of the dollar. And now we have this unbelievable social fabric that's getting ripped apart in the United States, where you can't believe the mainstream media anymore. I mean, who thought we would get to that point? I mean, I never thought in my lifetime it'd get to the point where I don't even want to listen to the mainstream media anymore because I know they're not telling me the truth.
Right.
It's mind-blowing. It is absolutely mind-blowing. I mean, I'll listen to the mainstream media talk about a subject. I'm not even going to bring the subject up. That's how bad it is right now. You can't even bring subject matter up. So listen to them talking about a subject, and then listen to a few podcasts by very qualified people say something different. I mean, it's mind-blowing what's happening right now. So you have this social fabric of America being ripped apart in tandem with blockchain putting pressure on our whole economic system. Something's going to change. And that's why I say we're in a transition here. I don't know. The key here is to what extent do we transform? We don't know the extent. We just know it's going to happen.
Right.
Is it how dystopic is it going to get? It's already getting dystopic. I mean, that's pretty evident. Yep. But how when you have to have, you have to show an ID to get into a restaurant, an ID that's government approved. That's really dystopic, and that's where we're at right now.
You're right, exactly.
So we're already there. It's a matter of how dystopic we get. I'm optimistic. By the end of the decade, I believe we're going to turn a corner. I believe that we're in a transition point right now, and we're kind of going down into a hole. a pit. I think we're devolving. We're still going downward. But I think by the middle of this decade, I think there's going to be a somehow, I don't know to what extent, but I hold out hope. Hopefully I'm not taking too many hopium pills, that basically free speech comes back and people are judged more on being truthful than anything else. So honesty and telling the truth and telling the facts, I think, is going to become how we basically climb out of this hole. And right now, I don't think that that's what society is. That's where we're at right now. We're at the Tower of Babel right now, where nobody makes sense and we're not communicating with each other. Communication is dying right now. And I think that's the way out, is we have to get back to the point where the people that are talking are the people that are respected and telling the truth tellers, I guess. People are going to pay attention to the truth tellers. I don't know who they're going to be, but that's kind of the transition point away from kind of listening to the government. I don't think it's going to be the government or the truth tellers. It's going to be private citizens.
So there's a whole lot of unknowns, and I just love that you've thought so much about the future. Any good investor needs to think a lot about the future, and you are bullish on precious metals for the reasons we discussed, and blockchain for the many reasons we discussed. So very enlightening. I could talk to you for easily 2.5 hours, but we'll probably leave it here if that's okay. So where can people go to just learn more from you and keep on top of your additional updates?
Well, before I give you that, I wanted to actually finish on one thing you just said about bullish on Bitcoin and bullish on gold and silver. I, as an investor, I'm always looking at the story changing, if you will. So you have to think in terms of what's trending and how long it will trend. So you have to basically have, as an investor, you have to have an open mind for instance, when you exit. And so I'm actually keeping my eye open on Bitcoin and some of the cryptos, on how much they become adopted, accepted going forward as a long-term investment, versus maybe you have to shorten your investment if they're not adopted. So I'm watching that very carefully. And I actually think there's a possibility, I don't know if very is a strong word, there's a possibility that if Bitcoin gets to a $2 or $3 trillion valuation, and right now it's around 1, if it gets to a $2 or $3 trillion valuation, I think we could see a battle between gold and Bitcoin for the new store of value. And if that becomes the case, I'll get out of my gold and go more in Bitcoin. But this is down the road. And then silver, I don't think that you can buy physical silver and think that I'm going to give this to my kids, because I think there's always a possibility that silver's, like right now, I mean, it's unbelievably bullish up to $100. But once we get to $100, the story could change. So, and I'm not as bullish on silver. I could be wrong here, going towards the end of the decade. So you have to think in terms of longevity, and you have to think in terms of always watching these things and looking at trends. And don't assume that your investment is good, for 5, 10, 15 years. You always have to keep an eye on these things. And for instance, any mining stock that I have, I think in terms of what is the exit point. At what point do I sell this stock? Every stock that I own, I always think about that. At what point? What is my exit strategy for this stock? And I think you have to think about that on all of your investments. We're no longer in our parents' generation. Our parents' generation, they when they bought stuff, it was for life.
Yep.
They buy a mutual fund. They're never getting out of it. It's forever.
Right.
They buy GM, they're never selling it, stuff like that. You can't think like our parents. We have to think in terms of, this is a dynamic era. we're in the investment now because it works, it makes sense. But I'm always thinking in terms of what's the lifespan of this investment. So I wanted to finish there. Okay, so now where to find me, right?
Yep.
So if you own any gold and silver mining stocks, then you definitely need to check out my website. If you don't own any, you can think about reading my book. My book's available on Amazon. You just go to Amazon, do Don Durrett, you'll see the gold book. But if you do own any gold and silver miners, definitely go check out my website. It's goldstockdata.com. And then you can follow me on Twitter. Just go to Twitter, Don Durrett. And Elliot, thanks a lot for having me on. This was fun. It was a good podcast.
Absolutely. Thank you. And I'm a huge fan of your Twitter and your updates and your newsletters.
Yeah, and next time we'll do this in video. Elliot's, he's on the road and he's wearing a t-shirt, and so we can do it next time.
That's right. I'm traveling, but definitely next time will be video. Absolutely. Our first video one. This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.